Well guys, it seems like the stock market is finally giving credit where credit is due and is starting to realize the enormous potential behind our favorite hydrogen, EV, and green energy stocks. Plug Power itself was up over 12% on Monday, whereas Nikola and Bloom Energy were also up a very respectable 5 to 6% on healthy above average volume. But as we all know, it's not just one catalyst or news release that can move all these stocks by such a big margin on a single day. There were a lot of bullish developments over the weekend from Europe, Cummins, and the IPCC that verified just how strong the demand for clean energy businesses really is, which is exactly what I'm going to cover in this video. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. To start things off, let's analyze a new press release that came out from Cummins, which is a major power generation company globally that's valued at $30 billion. As you can see, they recently announced that they're going to be supplying the hydrogen electrolyzers for one of the largest hydrogen taxi fleets in Europe that's going to be powered by Toyota Mirai. Now obviously the reason why this is such a big deal is because this will offset a lot of carbon emissions in and around the Paris area to reach the ambitions of the Olympic Games in Paris. A total of 15 stations will be developed by 2024 that run on hydrogen that'll be powered by those Cummins electrolyzers, and that is precisely why this news is very bullish for a company like Plug Power. For those that didn't already know, Plug Power also has a massive joint venture in Europe with a company called Renault, where they're also going to be developing a hydrogen ecosystem on EVs that run on fuel cells. Plug Power is by far the largest green hydrogen company in the world, so they manufacture both the fuel cells and the electrolyzers. So if a company that's worth almost $30 billion is willing to turn around its business and invest in electrolyzers like Cummins, then it goes to show that the direction Plug Power is headed in is definitely the right direction. And unlike Cummins' joint venture, Plug Power is targeting light commercial vehicles in Europe, which we all know not only pollute more, but they're also much more beneficial to a hydrogen powertrain. And guess what? When there are more companies developing green hydrogen ecosystems, the cost of the fuel is naturally going to start coming down, and that is going to make it much more competitive with diesel, petrol, and gasoline. We all know that green hydrogen is the most lowest carbon intensity form of making hydrogen gas, which is not only going to be used for powering fuel cell vehicles, but it'll also be used to power traditional industrial processes like steel and glass manufacturing. And on top of that, in Europe, there's already a massive movement where we're seeing companies shift towards hydrogen fuel cell heavy-duty vehicles, particularly like this German retailer Lidl. As you can see, Lidl has said that their primary reason from opting out of battery powertrains is the fact that the refueling time for fuel cells is only a couple of minutes, as compared to over 60 minutes or so for a battery powertrain. And I think it's safe to say that tailwinds and developments like these are exactly why stocks like Plug Power, Bloom Energy, and Nikola have been doing so well over the past month or so, as people are realizing that the climate crisis is a very big deal. One of the major international climate change organizations has already said that the time is right now to shift towards renewable energy and more effective ways of storing energy, and that we need to reduce our carbon emissions by around 2025 by around 40%, and that is not going to happen solely off batteries, and we're going to need to decarbonize some of the most polluting sectors like aircraft, heavy-duty transportation, and industrial processes. And obviously that is precisely where hydrogen technology falls right into place, because it can decarbonize a lot of tricky to decarbonize sectors that batteries simply can't do right now. But to be completely honest, I don't think Monday morning's Cummins news was the only thing that has moved clean energy stocks so much this week. I think a big role is also being played by some of the new initiatives that have come out from Hydrogen Europe and Canada. As you can see, not only has the European Commission already set a very aggressive strategy to build a hydrogen economy in Europe, but they're now also going to start pouring a lot of money into large-scale deployments around hydrogen. And this comes right after Canada recently announced that they're also going to be supporting domestic fuel cell and green hydrogen supply chains to build out their own ecosystem. And since obviously Plug Power has almost 90% market share in the fuel cell material handling business globally, Plug Power is going to benefit massively from the adoptions we're seeing in Europe and North America. And the best part is that Plug Power is not going to be the only business in North America that's going to benefit from a lot of these investments and tailwinds. Someone like Nikola Motors, who's developing fuel cell trucks, will create a lot of demand for green hydrogen, and easing supply chains will bring the cost of their product down significantly. We already know that the benefits and value proposition that these electric trucks bring to the road is immense, and the only thing that's really holding them back right now is infrastructure and cost. And to be completely honest, those are only short-term concerns as well, because in the long term, these trucks need to be on the road. It's not a question of getting them on the road because of cost, it's about getting them on the road in whatever way possible. And as we all saw with Tesla, Wall Street is always late to the party when it comes to actually realizing the clean energy movement. And so I personally think the risk to reward in clean energy, hydrogen, and EV plays right now is definitely unmatched. If we now quickly move over to the stock charts of Nikola and Plug Power to get an idea for what could be happening in the short term, as you can see, Plug specifically has broken above that 200-day moving average on a lot of significant volume. Obviously, the sell-off from around 46 bucks all the way down to 17 bucks was primarily driven by tax loss harvesting and inflation fears around Omicron. And so for me, I think this is a great example of how you want to approach buying the dip during a market crash. Even a stock like Nikola performed quite poorly from November all the way to February, even though the business had not changed. And like I said countless times, those are typically some of the best investment opportunities for growth stocks that you think can perform very well in the long run. If we now go back to Plug, as you can see, we're coming back to that middle of range that we've had since 2021. We had a lot of resistance around that $47 region and a lot of support around that $17 region, and now we're coming up to potentially test this $35 level. And so that could certainly act as a lot of resistance in the short term, but I definitely think over the next few days we are going to see some likely test of that level if we see a continuation of this momentum. As you can see on the weekly too, we've now reclaimed that 50-week moving average, which means that in the medium term, we are now officially in an uptrend. And so if we get above this $47 region anytime in 2022, we're going to be in for a very big short squeeze, because as you can see, that was a very aggressive period of shorting back in February and March of 2021. As for good dip buying opportunities, I would look for anything around $26 to $28, because as you can see in the short term, the RSI is definitely a little bit overheated. Whereas if we now move on over to Nikola Motors, as you can see, we've clearly broken out of this very aggressive downtrend that we've been in over the past year and a half. And as a result of that, we saw a lot of heavy volume on the move up, and so far on the move down, we're not seeing anything excessive in terms of selling volume. It seems that we got rejected from the 200-day moving average so far, which is not necessarily all that bad of a thing, because it means we could potentially get a nice reset to around this $850 to even $950 region right above this 50-day moving average. On the weekly time frame, we also got rejected from that confluence area with the 50-week moving average as well, which is why I initially thought this would be a very hard level for this stock to cross in the short term. But again, if we start seeing some momentum restored and if we break above that $12 region, then we will get a very nice move all the way up to this $15 region very quick. And finally, if we move on over to Bloom Energy, or ticker symbol BE, which is a stock I don't personally talk too much on this channel, this is another hydrogen company that I think can perform relatively well this year and next year because of the fact that they're moving towards profitability. I personally bought the dip very aggressively from around this $18 to $15 region, and as you can see, the stock has clearly rebounded extremely aggressively as Wall Street realized that this stock is only trading at a price to sales ratio of like $3 to $4. I'm personally looking to continue building my position on the stock, anything under 23 to 20 bucks, and I think with this short-term breakout, we could definitely see a retest of this $30 resistance level very fast. But obviously in the short term, we might need things to cool off a little bit before we continue higher. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below your guys' thoughts on some of the big developments in green hydrogen recently. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.